Hey folks, what a view behind me. I'm at Black Bull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Black Bull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Black Bull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, guys? This is Brinks Trades coming to you live with another week of breakdowns. Hope everybody's doing good. Let's see, we got 15 people on the call. Steve Palmer says, "Sup, Brody?" What's going on, Steve? Where you calling in from, man? Or where are you watching from? Let's see who else we got. Where's everybody calling in from? Where's everybody from? While I'm getting this stuff pulled up. Let me do that. Jeanette says, "Good morning. Orlando, Florida." Steve's calling in from Orlando. I love seeing like where people call in from with these calls, because it just kind of lets you know, like obviously this trading stuff is universal. It's global, right? All right, so I think I'm going to do a little bit different, because a little bit different things today, because again, it's Saturday. So I'm still trying to play around with the times and see like what times work best for everybody. Obviously, like the majority of the last year, I've been doing this on a Saturday call, but did a couple of them on Sunday just to kind of see if there was better for people, if we get more people showing up. So Jeanette says Houston, so shout out to H-Town. So what I want to do is I want to start things and do things a little bit differently. I want to go through the Forex Factory just for this upcoming week. This is an aspect of the trading, kind of like the preparation, that I don't really talk about a lot. But I'm just getting a better understanding of what's going on for the next week, and really just kind of preparing, based on news releases. So for looking through this next week, there's a few things that are kind of like sticking out to me. So July 9th, really no news on Monday, but July 9th, Fed Chair Powell will speak and testify. He actually will testify Tuesday and Wednesday. So I'm probably going to stay away from the markets on those days, or at least at minimum while he's testifying during those hours. I would imagine that this is going to be very volatile for the market, and this is going to be the semi-annual monetary policy report. So that's why he's testifying. So it happens twice a year. Going into Thursday, there's going to be core CPI. So again, this CPI, if you guys don't know, these are news events that I won't actively be in the market for, but I still will probably trade those days. And then Friday, PPI too. So really, like, the big things we're watching out for this week is Fed Chair Powell talking at 10 a.m. So I usually want to be out of the market while he's talking. But it looks like the back half of this week is going to be kind of interesting. So worst case scenario, I probably will stay out of the markets while he's talking. I'm sorry, stay out the whole day. Best case scenario, I'll be out, around that 10 to or 30, like 15 to 30 minutes before and after he's done talking. So we'll see what happens, see what the market presents us with. Again, you guys know by now, I don't look at the markets until the next, really until these sessions. So wherever the market closed at yesterday, I really don't have an idea. So let me do this. I did, if you guys aren't subscribed to my YouTube channel, I actually had a chance to go live a few times last week. I did a couple calls. The first one, I think I took some trades on my actual account with Apex, and then the other ones were just challenges that I built that I'm working on. So I ended up passing two $50,000 challenges with Apex, and then doing a lot of work towards a third $250,000 challenge. So I think that brings me up to like I've passed. I think I passed over 20 accounts with Apex, but I did a little mishap when I was paying for the live accounts, and I ended up accidentally canceling a few of them. So I think right now I'm sitting at like 17, 18 accounts, something like that. So almost 18 times 50 is like, it's about 900,000, I think, in funded accounts with just Apex. So it's really, really big deal. So yeah, so let's go ahead and look at TradingView and get that pulled up. I really start with the dollar analysis. Obviously, you guys know by now, if I do dollar analysis, that means it's because I am trying to get a better understanding of what's going on in the market. And then ideally, each market should kind of correlate or correspond with the overarching market. So coming into this week, last week, what we said we wanted to see was really the market tend to go higher. We wanted to see this level really respected, and the market really run towards this all-time high. I'm sorry, that's all-time high. This weekly target at 107.65. So we've been saying that for the last few weeks. We didn't get that this week, right? We saw the market really start to reject from this level and really break structure and go back down. So overarching, this idea right here is something I still want to see play out, but we're not getting that as of now. And so if I get rid of these arrows here, just so you guys can see better, this is really just a huge consolidation channel, this from this high to this low. So there's a few things that kind of led me to the idea that we could keep going down. If I go to the 4-hour time frame, really, again, you can see this, we've just kind of been ranging from this high to this low. If we take out this low here, my bias will really start to shift long term from a bearish trend to a bullish trend. So I'm really just looking to see how we respond. But everything inside of this range is just kind of noise until we really hit this target or take this high. So I really don't have a bias on dollar, which probably will affect analysis on Nasdaq. So if we take a look back and we just kind of take a step back on Nasdaq, you can see we're trading really at the all-time high here. And so this is going to be a week where since we're trading at the all-time high, obviously, I can't really call a target. If you guys have been paying attention, our weekly target would obviously be the high of the week in a bullish trend, a bullish nature. But since we're starting so close to that high, I don't really see a reason. Let me get rid of some of these. My charts are always messy because I am actively trading. Like, this is not a game. Like, I really do this. I'm not a guru that just sits out online and tries to sell people a course. Like, I actually do this every day. So or every week, not every day. So ideally, last week we wanted to see is the market really dive into this old imbalance here and really head for this high. This was our target last week. And so we ended up running through that. We smashed our overall target. We found a bunch of bullish opportunities. Again, if you are in my mentorship group, you guys took advantage of a lot of that. And if you are also subscribed to my YouTube channel, you guys saw me do a lot of that as well. So if you're not subscribed, please subscribe. I'll drop a link in the chat before this is over. Really Sorry, let me go back. I'm going back to some of these comments. So, does a funded account really pay you in all account pays or in all accounts? I don't really get what you mean. I think you're asking me, do funded accounts pay out? And they do. Um, dollar is bearish as of NFP. 4.1 employment rates, confidence for 2 rate cuts this year. Yeah, I mean, so going back to dollar really quickly, I can make a case for dollar being bearish. I definitely can. There's a couple things here, but overarching from just a technical standpoint, like we've been in this range for a while, so I can see there's a world where I could see the market running for this low here and then deciding to go back up. Long term, all I'm saying with dollar is that I don't really have a long-term bias. A long-term bias on dollar. We could do something like this, and this is just from a statistical or a technical standpoint, not a fundamental. We could do something like this, right? Where we could keep crashing. We could come back down into this range here and then go up. Like there's a lot of options based on just the technicals. And so what I'm basically saying is that this overarching range is just that it's a range, right? And so if we go to the weekly time frame, again, a lot of consolidation. Go to the monthly time frame. We're pretty much trading back into an old imbalance here that price has chosen to respect a few times. So this could be the low, and we could turn around and go up. So basically what I'm saying is the market's at a state of equilibrium, and it's really hard to call the next move, right? And so that's my way of saying I'm not 100% sure where it's going to go, and that's okay. Like you don't have to know where the market's going to go 100% of the time. So do I see a world where the market could be bearish? 100%. I could see the market trading down here. I think probably long term we are, just based on what we're seeing on this monthly time frame. But from a week to week perspective or the week to week basis, like I can't really call it. So yeah, I definitely can see a world where we're bearish long term, but it's market's kind of at a state of equilibrium right now. So it's kind of hard to call the next price swing, despite what the fundamentals are saying. Oh, you're right. So this is what I was just saying is that like if you look at dollar on the monthly time frame, I think my chart should be changing now. Cool. It's just really hard to call the next price swing. If you look at the higher time frames, we're pretty much in a consolidation channel. And there's a few levels where we're technically respecting this bearish fair value gap. We're also respecting this zone right here as well. So I can make a case for the market to ride up and go higher. I could also make a case for the market to go lower. And so when it's time to really decide on the next level and how we're going to trade and what the bias is, if we're in a consolidation zone or if we're in a an equilibrium zone, like it's very hard to like predict. And so you kind of have to wait and see what the market's doing. So there's definitely times like where I don't even know what the market's doing, and that's cool. Like as a trader, 90% of it's, well, I say 90% of the time, like I probably say like a good 60% of the time I know what I'm doing and I know what I'm executing on based on what the market's showing me. It's kind of like you're always reacting. You anticipate a little bit, but you're reacting most of the time. So like I can anticipate, what the market's going to do in certain zones, but when we get to the consolidation areas, technically the market can't do anything. Ideally, there's things I would like it to see. And so when you guys say, when I do my analysis, I never really say I know where the market is going. And anybody who tells you they know 100% where the market's going, they're lying. Like unfollow them, unsubscribe. They're liars. I would like to see the market do certain things, and it's totally different. And that's really what I talk to my students about, like how we build biases and how we attack the market. We really just want to see one thing happen. A lot of gurus will say like, support and resistance people, especially will say like, oh, I want the market to hit this line, and if it bounces off of this line, then I'll keep buying. But if it goes through here, I'll wait for a retest of this line, and then I'll go down, right? That's what a lot of people say. They'll do something like this. I guess I'll draw like this. They'll say, I'm either looking to buy this support level or wait for it to turn into wait for it to turn into resistance, breaking through, and then I'll buy it. That's not a strategy, to be completely honest. Like, that's just you trying to play both sides. And so you also can get burned a bunch of times too, because what happens if price drops below here and then it goes back up, or vice versa, it goes back down and then it retests it and then it breaks right back, right? And so trading just like this normal idea of support and resistance, supply and demand doesn't work practically enough for it to be consistently profitable, to be honest, at least with the way that I see the market. So yeah, I mean, what helps with what I teach my students is to have a lane, have a overall bias in the market. And we're saying if we think the market's going up based on like all of our technical factors, then that's the bias we're sticking with. And it has to do a very set list of things before we even change our bias. And most of the time, week to week, your bias isn't going to change. So yeah, so what's your view? So going back through these questions, Skippo says, why don't you trade Forex and gold? So I used to trade Forex a lot. The main thing with Forex for me is it does not move as fast as the indices, which is cool. I mean, I don't think the speed or the volatility doesn't always matter. As far as like your overall profit, like you can make 100,000 trading euro, you can make 100,000 trading indices, right? Like it's still money at the end of the day. It's more of a psychological thing about like, with euro, with it not moving to your targets as fast as maybe Nasdaq does, you're going to be in consolidation a lot longer, or moves don't happen as fast. So it kind of messes with your head more. And then secondly, I live in the US. There's a lot of Forex stuff going on as far as prop firms. Like I trade a lot with prop firms. And so, there's just been a lot of regulation changes. And so I figured, hey, like if I'm going to learn how to trade, not learn how to trade, but if I'm going to keep trading in a market, then I might as well, rock with the ones that are 100% regulated and 100%, condoned by the U.S. government. So they're allowed. And then gold, I don't trade gold because it's just like everybody asks me about this on a weekly basis, but people say, why do you trade gold? Why don't you trade gold? It's just an event-driven market. So I think people, again, I really think traders come into this game and they see stuff like everybody wants to trade like the shiny object, or they want to tell people that they're trading something really cool. Like, and so let's say like, oh man, I'm trading gold. Like, yeah, I'm a gold trader. And that's cool. Like, don't get me wrong. But I mean, it's an event-driven market. It's not as volatile. It's not as predictable. And I think the number one thing, like when you choose an asset, you should be looking for something that gives you an edge, whether that edge is, you should be looking for something that gives you a statistical edge, right? And so when the market does certain things for me, like it gets me into certain situations, then like I can, I have a high probability of executing based on what the market's giving me at a particular time, or, in different levels. So I think the number one thing you need to choose when you have a chart or when you're looking to trade something is, do I have an edge when trading this? If you have an edge, you can push that edge, right? That's the only thing that matters in trading, is having good risk management, and having an edge that works. And your edge is usually your trading strategy. So I don't trade gold and Forex for that reason. I think my edge is better in Nasdaq. The volatility is better. And like I said, gold, it doesn't move the way that I want to see it move most of the time. And then also just Forex, I don't trade Forex because I miss New York session a lot of times. So I live in the Eastern time zone in the United States. So I missed a lot of London session moves. You can trade the New York session, but it's just not as volatile. If you're trading in New York, you might as well just trade indices because it's just a little bit more volatile for me. But everybody has their own thing. So it's really not what I think. It's really what you're the most comfortable with. So I just started trading gold. Now I really trade it because NAS is so much more predictable to me. Yeah, that's pretty much what I'm saying is that like it's right now and it depends. So like right now we're in a bull market. So investors say this a lot. Like it's very easy to trade bull markets because it's at the end of the day, Nasdaq is an investment vehicle, so like over time it should rise, right? So if you look at this is May of 2020, right? This was March during that everybody knows what happened in March of 2020, right? The market crashed, and look at what the markets did since then. It's rebounded over 3 times. If you would have invested $6,000 in the market right now, 4 years later it would be almost $20,000, right? So the market rises overall. So it's easier to predict in bull markets. What gets people up and trips people up is these sections of bear markets right here. So when you look at these months of trading, right? So really from June of 22, December of 21 to like February of 23, we were in a bear market. And so being able to trade this is the hard part, right? This is where the skill comes in. And I think, to be honest, there's skill for everything because you can predict, you can know what the market's going to do, but you can't always know exactly when it's going to happen. And so that's the fun part of trading. And that's the part that really trips people up is people can trade NASDAQ and still build their account and they know that the market's going to keep going higher, right? It's because they don't have the skills or the wherewithal to understand how the market works, how the market books price. And kind of like how the machine works. And so if you understand that, then it makes the game a little bit easier. But ideally, in theory, NASDAQ should be easier to trade because you already kind of somewhat know the direction that's supposed to happen over time. Why US30 moves different than NASDAQ to SPX? So again, US30 is another one that like a lot of times people take these pairs and they trade them because they're the popular ones. So I was trading Forex right around the time that everybody made the switch to indices, right? And US30 was just the one that everybody gravitated towards the most because there was a few big traders that had stopped trading Forex and they started trading like, indices, and US30 was the one that they just gravitated to. And then pretty soon everybody was trading US30. But US30 to me is actually the worst indice to trade. Like it kind of moves like the redheaded stepchild of like indices. So no disrespect to anybody that's redhead or a stepchild, but it just moves a little bit differently than the rest of them. And it really, it has a lot to do with the amount of like pairs or the amount of stocks that make up the Dow Jones. So US30 is really just the Dow Jones. The Dow Jones has the top 30 stocks. So it's a lot more volatile in the price swings because on a given day, the more stocks you have in something or the bigger the number of things that you're comparing it against, the better the average is. So like if you look at like the NBA, right, there's 400 people in the NBA and they are really, really good, right? And so if you look at the average of the skill level in the NBA, you're going to be like, okay, wow. If you're just looking at that, it's a very high average, right? And it's very up here. But if you compare the NBA versus everybody, everybody lives in America, right? Or everybody lives in the world and their skill level, it's going to give you a better average of like the average person's basketball level is, right? Or skill level is, right? It's just having more stocks or having more things to compare it to gives you a more stable average or more predictable average. And so the US30 only having 30 stocks, it's going to be, even though those are the 30 best performing stocks, and that's why the number on the Dow Jones is higher, it can be more susceptible to price swings because let's say the top 3 stocks, the top 10 stocks have a terrible day, right? Boom. Okay, well, your average just went down like crazy, and the price swings are more volatile because of that. So that's why it's a little bit different. But overall, like if the two of them are going up, the third should be going up too. It's just that the Nasdaq usually gives you a better look at the market, a better idea of what's going on in the market, and this S&P is even more stable than that, right? So hopefully that kind of answers your question. So someone asked me, do you day trade or swing? What time frames do you trade? So time frames, all my time frame executions are done on lower time frames. I day trade, I don't swing, especially on Nasdaq. I'm the type of person where I like to get in and get out, and I don't like having money held overnight. I think that's what long-term investing is for, right? So if you have like a Roth IRA or you invest in stocks through your job or like whatever you do, like I feel like that's what that's for. To me, like if I'm day trading, like I want to make sure that like I'm in and out. And I know that like anything can happen, right? Like, tomorrow, like I could hold a trade on Friday, the market closes, and then um, you know, something could happen in, I don't know, a different part of the country, a different part of the world, and then all of a sudden the stock tanks, right? I have a friend, and we talked about this all the time. We joke about this now, but he's one of my like quote unquote trading partners. We came up together trading, and he was holding money overnight in euro when one country invaded another country. I don't want to talk about the countries because I think it hurts the algorithm, but everybody knows about the big conflict that happened in Europe about a couple of years ago. And he was holding money in euro when that happened, and it killed his account. He lost $20,000 in like an hour. I'm sorry, not even an hour. He lost $20,000 in like 5 minutes. And so, like, I don't swing trade for that reason because just where we're at geopolitically, we're overdue for a lot of like negative things to happen globally. And so it's just any of those things can be used as an excuse to drop price. Shout out to Tanzania. I told you there's people from all over the world trading early, that watch this stuff. Other than Nasdaq or US30 or gold, which one would you trade if you choose US30 gold? I guess I don't know. Again, I wouldn't trade either, to be honest. So a lot of times I do the analysis on US30, and I'm really just using it. I only trade Nasdaq, so that's me, right? I only trade Nasdaq because I think that I'm used to it. I think it works the best for me. I use US30 as kind of like a indicator to just see if there's any reasons or reasons as to why I might want to look for the opposite in my bias, or is there any reason why my bias might not happen, right? So I talk about this idea of divergence, meaning that sometimes two of these can go up and then one of them might go in the opposite direction or vice versa. And usually I'll use that third indicator or that third chart indice to kind of get a better understanding of maybe we might be seeing a reversal in the overall market, right? And so I'm just using it as like kind of a divergence just to see if I see any like divergence in the market. So I don't really even trade US30. I have before, like when I first started trading indices, I traded US30. But it's not, I mean, I mean, I would recommend, S&P. I think S&P might be the easiest one to trade out of all of them. Nasdaq is like the best balance of volatility and ease to me. US30, I wouldn't trade gold at all. Like I've said this a million times. Like I don't trade gold. I think it's a terrible chart to trade, and I don't think it's consistent. Like that's my stance. So if I had to pick, I'd pick US30, but what I'm really trying to tell you is I wouldn't trade either one of these. If I'm trading indices, it would be one of the two. So hopefully, like, I don't know. Again, people love gold. I don't know if anybody's a gold trader, like put in the chat, like, why do you love gold so much? Because I get this every week. I get this more than euro. I get this more than indices. Like, I don't understand what people love gold. Like if you're a gold trader or you trade gold and that's your chart, like why do you trade that versus anything else? Anyway, so let's go to Nasdaq. So again, we wanted to see the market really dip in here over the past week or two. So going to the weekly time frame, saw the market really dip into this old weekly imbalance here, really take off to these highs. Gave us some good things too. So ideally, going into this week, I don't want to pick a top on this market. That's what we basically been calling out is that there's a few things. This is an election year, so usually it's a bull market in election years. But then also, if you pick a top, it's like trying to catch a falling knife. Like you never really know when it's going to end. So you kind of just have to rock with it. And usually they will go longer than you think they will, right? So people were trying to call a bull market or the end of the bull market here, right, at 19,000 or at 18,000 when we took out this high. And we did dip a lot, right, into 18,000. We ended up dipping like 2,000 points, but now we're almost 2,000 points higher. Same thing here. So it's hard to call the end of a bull market or the end of a bear market. You just have to be ready for when it does. And so there's a few levels. Like if the market just did something like this next week, market just went something like just tanked like that, I'd be like, okay, we're probably in a bear market. It's probably not going to do that, right? But like if the market just did something crazy like that, then I would start to look for reasons as to why we would be in a bear market. So every week trading is just one big chess game, and it's just you're going to war with the market every week, and you're just trying to figure out where what's going on and try to executing based on that. So that's why making a plan is so important. The majority, like 90% of my work for the next week is done on these calls. That's why I continue to do them every week, because this is actually my prep work going for next week. I'm just so happy I'm doing it in front of all of y'all. Shout out to Hugo. Yeah, definitely funky week coming up. Powell, his talking kind of like I would say it throws a wrench in things, but it definitely is going to be interesting to see. Anyway, so ideally last week coming into NASDAQ, we wanted to see this. This is what we got. So coming into the week, this is where the market was sitting. Friday. So the market was sitting. We wanted to see it dip down a little bit more. We didn't quite go as deep as maybe I thought we would. I thought we might come down here and really run this low. But we'd already really traded in here. So yeah, there was definitely a chance that it would have been a shallow drop before we took off and went higher. And that's exactly what we got. So overarching idea, we still have been taken out, trading back into this old imbalance and then went higher. Smashed on Friday and Thursday, really NFP, I think, was one of the catalysts for the market running higher. So it was a really good week. So ideally, again, our new target is here. I would love to see the market really just trade back down, maybe into this range, and then look to go higher. We obviously, the market's sitting at this all-time high. So if the market really just runs through this high, then I can't really do anything. I won't really have any like targets to shoot for. So best case scenario, I want to see the market really spend a couple days trading lower before it takes out that high. So that's what I want to see happen. I'm looking in this range here, like in particularly this 20,309 level is really where I'd love to see price really trade back into to go higher. But that's what I'll be looking for starting this week off. So hopefully that helps. Oh, you guys can't see. Sorry. It's doing the same thing again. I don't know why it's doing this. Daily. This is all I was saying before, is that ideally, I want to see the market really run for this high, but I'd love for it to spend a couple of days really trading back down into this range. One, because it gives me a bigger target to aim for. Right now, we're pretty much sitting like, I don't know, 20 points off of the all-time high or the high of last week. So would love for the market to really trade back into this range, give us something to aim for, and really take out that high is what I would love to see happen. So until then, though, I'm pretty much sitting on my hands. So I'm really hoping that the first part of the week really trades it back down. Maybe with these news releases that we're gonna get with Jerome Powell, it'll be bearish sentiment. We can kind of trade back into that. So, yep, sorry, I got it, fixed it. I don't know why it's doing that, but whatever. S&P, same thing. Same setup here. I mean, last week we look at US 500. I thought we could have traded a little bit deeper. We didn't get that. Just looking at the weekly time frame, I thought we might have came back down into this range and then went higher. Didn't quite get that. It's cool. A lot of times the hardest thing to pick in trading is going to be the overall high and low of the week. But if you have an idea of the range of what you're trying to see happen, then it allows you to make adjustments. So just like on Nasdaq, we didn't quite go as low as I wanted to see for this week, but we did. The overall direction was correct. So sometimes you just got to work with that. So we saw this market do this. So ideally, I would love to see the market do something like this. Trade into this old range here, and then look to go higher. CE, for my students, CE works both ways. So I would love for price to stay above that level too. It's not just respecting it to the, when we want to see stuff go down or through it, it's also on the opposite end. So ideally, I would love for the market really to trade back in this range here. And this is last week's target. So this is the new target. So I'd love for the market to really trade back into this range and then go higher. But somewhere between this 5,519 level and 5,509. So somewhere staying in between that range to go higher. Same thing, obviously it'd be the same thing on ES too, very similar chart. This is just the Forex version. So whatever these numbers are on ES, same thing. But ideally this range is where I would love to see the market really trade back into. Best case scenario. And then Dow Jones. Yo, this is messy. Long-term target on Dow Jones this high. Again, this is why the price swings on Dow Jones are, sometimes they can be a little more volatile or being held. The thing that I didn't like with Dow Jones the past few weeks is that we are consistently making new all-time highs on Nasdaq and S&P. We haven't really got there on Dow Jones. So I'm kind of nervous that we could be setting ourselves up for a long-term short. There's a few things I'm seeing here as well. Yeah, there's a few things I'm seeing that could be potentially leading us up to a long-term short, or short-term short before we go higher. So something like this. I'm still bullish long-term, but it just might be a ways before we get there. So this is kind of why I'm very interested to see what Dow Jones is going to do, but it's also a reason that I don't trade this. So ideally, I'd like to see this happen. Like if we go to the 4-hour, let's see. Yeah, ideally, I'd like to see some, maybe not this low, but something like this low where we trade back down here and then go higher. But as of right now, I mean, this has just really not been moving the way that I thought it was going to move initially. So ideally, it should be in line with what S&P and Nasdaq are doing, but it's just taking a very long time to get there. So that's all I got for those three. I'll stay on for any other questions you guys have. If you want to see me trade live, I will drop I will drop a link to my YouTube channel. If you are not subscribed, please subscribe. I mean, this is basically just like free advice. Again, I give a lot away for free. Obviously, my mentorship students I work with the most with, and they get everything. And I'm slowly integrating them into more and everything. They have a basic strategy, but now we're kind of like adding more to it. But this is basically, again, I'm showing my executions, showing me coming to the market. So if you guys are trading and you want to see how someone approaches the market and kind of the thought process, this is the one thing that a lot of traders just don't do. They fail to put their analysis in the market and really make it public. And so what I've noticed is a lot of people will sell a course. They either A, don't know how to trade for real, or B, they just don't trade live. And so I feel like application is a very important thing. And so I would argue, and maybe if any of my students are in here, feel free to let me know if I'm wrong. But I would argue that, them seeing me trade live really has helped cement some of the stuff better with them. And then obviously all the replay and the conversations that we do as well. So, yeah, so hopefully that kind of helps. For me, when I was trading US30, so I'm looking at Skippo. For me, when I was trading US30 and Nasdaq, I was short in US30 and Nasdaq was going long. And I was seeing US30 move long and fast and build my account. So I guess my question is, why were you? So these things are correlated, right? So you should never really be short in one and long in the other. There's a very, very small amount of situations where that actually works. They're going to be correlated, right? So like if you look at these indices again, US30 just means the top stocks and that the top 30 stocks, right? NAS100 is going to be the top 100 stocks. S&P 500 or US500 is going to be the top 500 stocks. So that 30 stocks, the same 30 stocks that are in the US30 are also in the Nasdaq, right? And the same top 100 stocks are also in the top 500, right? So in theory, these things should be correlated most of the time, because if your top 30 is going up, there's a really good chance that your top 100 is going up. And if your top 100 is going up, it's a very good chance your top 500 is going up. So there's very rarely a situation where you should be short in one and long in the other. And usually if that's the case, then it might signal an overall market shift. So like you should never really be shorting one and long in the other. There's a very small amount of situations that's happening. So yeah. So again, that's all I got for you guys. If you guys have any questions at all, please, let me know. Hopefully this kind of helps. And I got a couple minutes, so yeah, I'll stay on and answer any other questions. I will not look at gold. Don't ask me about gold. I'm not doing that. Cool. Yeah, no problem. Thank you for hopping on and taking some time out of your Saturday to jump on. So I think that's all I got. So I'm gonna actually end the call. But again, if you guys have any other questions, feel free to find me on Telegram. I will drop a link to the Telegram as well. Let me do that. Here's a link to tick ups. Again, this is all my free analysis. I don't spend a lot of time charging people for things outside of my mentorship group. So, and they are the ones that get the most of the time and attention from me. So hopefully you guys enjoy this. And then, if you have any questions, feel free to hit me up. Peace.